And then I am going to turn it over to Jenna to introduce herself and tee up the workshop.
Thank you, Laura. I would ask if anyone felt comfortable, putting themselves on camera. I would love it because it's really nice to talk to people when I do this. There's a couple of people now, but if you could, that would be wonderful. You don't have to say anything to me. I really like interacting with the chat. I really am happy to answer questions throughout this time. So please feel free to use the chat whenever you want. Ask me questions by raising your hand and using that little icon on the bottom of your screen where it says reactions. So if you scroll down to the bottom of the screen on the right, it's a little smiley face. If you click that, you can do a little hand raise. And I'm happy to be interrupted pretty much any time. Every slide, I'm probably going to say, does anyone have any questions? Because this really is your time, and I love Q&A. A little bit about me. My name is Jenna. My pronouns are she, her. My current business is called Shift Accounting, LLC. Our resources page is up, as well as the slideshow presentation in the chat. Please feel free to read along and tend to use that resources page because I'll reference it a lot. My Instagram also will be referenced and you can access it. There's a ton of resources on there, and my Linktree kind of bio has so many videos, articles, etc. I come to tax work from like a women's studies background and more like a social justice background. And I kind of saw tax as a space that I could kind of apply that knowledge and way of seeing the world and more person-centered approach to money. And so, people are having trouble getting in. Okay, well, we'll go over everything over and over again. So I'm just going to keep going because it's being recorded, but as they come in, we'll welcome them into the space. And if people could keep sharing the links because they only see them as they, So anyway, that's where I come to tax from, and bookkeeping and money work. I have a lot of ideas about how we could handle money differently and talk about it differently. And you'll hear that. And I want to help y'all have a different experience with being a small business owner. So let's get started. I will present my screen. Screen. And there will be a break. I don't usually have them, but I have to have them for my dog to be let out. So we will have a break at some point. Let me get the chat pulled up so I can see where y'all are at. All right. Well, thanks so much for being here, and here we go. So Small Business 101, empowerment through education. You got website, email, and Instagram all there. I like to start this off by talking about the assumptions and kind of the values that I do this work with, because I think it is rare in the world of accounting for an accountant to kind of say where they're coming from and contextualize their experience and their belief system. And I got inspired to do this by Hadassah Damien. So I'm going to have sprinkled in resources all throughout this workshop that I think you should check out. Hadassah has a blog. Hadassah does a podcast. This is their website, Ride Free Fearless Money. And I just want to name that the assumptions and values that I have going into this workshop are that everybody deserves to have resources, that capitalism is an unjust economic system and it is upheld by the tax code. And I wanted to plug Dorothy A. Brown's book, The Whiteness of Wealth. It's an incredible book about that kind of rich history of the tax code and how it is inherently problematic and racist. And I think it's really telling. There's also suggestions of changes that can happen, but I mostly love it because it really highlights those inequities from a Black woman who was a law professor, a tax law professor. And there's no perfect way to run your business. So perfectionism is a value of white supremacy, and it's meant to make you feel that you're not doing it right. And so many times, today I had a meeting earlier with some folks that were automatically feeling shame, saying this is a stupid question, I should know how to do this. Someone felt bad because they hadn't filed taxes in many years. And I just really want to kind of break that down and say, please, you don't have to come into the space feeling that way. There are no dumb questions. The system is so complicated. And usually when people make a mistake, to me, it's because it's telling of the system, not you. And so I just want to give you the space to hold that. And that choosing to be a business owner means that you're choosing to write your financial story instead of having it written for you. And that's something to really honor and hold on to. And I think that that's something really special. So let's get going. One thing I just want to make clear going into this is the difference between being self-employed versus an employee. So we kind of have the same kind of starting ground. And it's all about kind of the relationship. And so when you're in an employee-employer relationship, every time you're paid, your check is going to be a bit lighter than your hours times your wages, or if it's a salary. And that's because your taxes are withheld from your paycheck every time. Your employer actually does mathematical calculations through, a payroll service or whatever, and they withhold certain taxes on your behalf and then pay them throughout the year to different departments. And then when you file your income taxes annually, you either get a refund or you owe money. And that in part is due to that W-2 that you receive from your, paycheck job. There may be other things going on with your tax return, but that tends to be a big part of it. And that's just the guesstimate throughout the year. As you're earning money, the expectation is you're going to pay money to these different tax departments. Your employer does it on your behalf as an employee. When you're self-employed, a freelancer, an independent contractor, all of these words are pretty much interchangeable when it comes to tax. Nobody takes taxes out for you. So you'll have a rate, you times it by the hours, or maybe you sell goods and you get paid and no one's withholding tax. So that's really the major difference, is how do we capture that relationship? How do we figure out what to do with that money? What taxes do we pay? How do we pay them? Where do we pay them? And please put anything in the chat, raise your hand if you have any questions. So I usually start with laying out some basic business structure. Business structure really is more like a lawyer-centered kind of conversation, but also having a lawyer is really inaccessible to a lot of people, and also kind of not necessary when you're just starting off. If you're going to be in a business that has multiple owners, or is kind of the corporation route, I would suggest talking to a lawyer, but most 99.9% of the businesses that I work with start off one person has an idea and they're trying to have a business. And in Oregon, so I'm centering Oregon because every state handles business structure differently. The path might be similar, but cost might be different. So what I tell people to do is contact the Secretary of State where you live. So if you're in Washington, if you're in California, if you're in Idaho, I would contact the Secretary of State and tell them what you want to do and ask for their guidance. There's also going to be small business programs everywhere too. Oregon, it's pretty simple. Sole proprietor is basically any one of you selling your time or a good for money with the intent of doing business. That's it. It's your name, it's your social security number that you identify yourself with. You don't have to register with the Secretary of State to do this. You're not telling the IRS necessarily. You just start doing business. It doesn't cost any money for registration. And you can use your social security number to identify yourself for your bank account, for example. You could get an employer identification number, which is an EIN, but it's not necessary, and most people are not doing it at this level. They're just keeping it real streamlined and simple. The next kind of step up in complexity is if you want to do business under a name that is not your name. So if I want to do business not using the name Jenna Golden, I want to use some other name, then I have to register it with the Secretary of State to do business as another name. Sometimes it's referred to as ABN, or assumed business name. That in Oregon is $50 every other year. And again, you can still use your social, or you can get an EIN for that. And I have the steps on the next slide and all the websites that you go to do this too. So just so you know that's coming. The next level is the single member LLC. So LLC stands for Limited Liability Company. These businesses for me are going to be businesses that I can imagine growing significantly financially, businesses that are maybe more risky. So maybe they're ones, I always say it's if you're dealing with people's money or their bodies, then I kind of want you to be an LLC, because those are spaces where there's more risk because you're doing something pretty intimate with people. And I'd want to have that added level of protection. I mean, of course, I have insurance as an accountant, and a naturopath has insurance as a doctor, but like it doesn't hurt to have that added protection that your business life and personal life are separated. In Oregon, it's $100 a year to do this. In California, it's $800. So this is not going to be a suggestion I always make for California-based businesses. So that's why I want to really know where you are, talk to the Secretary of State, and find out what those barriers are and those costs are to work within it. And at this level, we want you to get an employer identification number. And that's what you would do is you would register with the Secretary of State, you would get your name, then you would go to the IRS website, and that's where you would get the EIN coming in the next slide. And that's an employer identification number. And then you take both those pieces of information and then you bring it to the bank. And that's where you would open your business bank account with that data. If you're a sole proprietor though, and you wanna track your money for your business income and expenses, but you don't have a registered business name, you can just set up a separate personal account, which is a great tactic and tool for record keeping. So it doesn't have to be an official business bank account for you to do business in it. You would just open it up under your name and social. Credit unions will usually do things like that for free. So it wouldn't cost you anything to do it, but it's going to really save you time, which saves you money when it comes to record keeping. The S Corporation LLC and the partnership DBA or LLC, these are much more complex structures and ones that I don't really talk about too much in workshops like this, because I do feel like there's an amount of personal kind of information that needs to be shared to really properly help someone. I never want to cause harm to anyone by trying to help them. And I feel like in a conversation like this, I want to get more data. So that's something for you to think about too, is if you're thinking about starting a business with somebody else, it's really good to talk to someone who does accounting work, potentially a lawyer, to find out things that you might not think about going into it. I tend to discourage people from starting a business with a partner just because of how complicated it can be. I tend to get people to grow into it. Again, you're not wrong if you start that way. I just want to suggest that it's something you can grow into. Just like if you start as a sole proprietor DBA, you could change to a single member LLC through a few easy steps. Contact the Secretary of State and they'll guide you through that process. So you can kind of always change things, just like a tax return. If you make a mistake, you want to change something, you can amend it. It's just knowing the process. And I try to streamline it for you. I try to make things as simple as possible so you don't have to change anything in the future and waste your time opening and closing bank accounts, which is just time consuming. One important thing to note is that the sole proprietor DBA, and the single member LLC all file taxes exactly the same. So each one of those entities files taxes on a Schedule C form, which is part of your personal tax return. And I'll mention that later. I show you the form. I kind of lead myself into the next slide because this is the conversation that every new business needs to have. But just so you understand, because I have a lot of people say, well, I'm an LLC, what's different now? And I'm like, is it still just you? And they say, yes. And I say, well, nothing's different tax-wise. They're all the same form. These entity kind of structures are really about legal structure than it is about tax. So I just want to make that clear. I'm going to move on unless there's any questions here. I don't see any. Okay. Registering your business in Oregon. So again, we went through these process already. There's one part added onto it, which may not apply to folks here, depending on where you live in your zip code. And I do have some links later on to see if you fall into the jurisdiction of City of Portland, Multnomah County, or TriMet for two different taxes I will mention. Number one is choose your business structure. So if you're a sole proprietor, then you'll just skip to step 4. If not, then you'll go to the Secretary of State, and this is a live link. You first need to make sure the business name isn't taken. When you do it, you search the names and make sure it's not taken, and then you go ahead and register. You wait to get your registry number from the Secretary of State, and then you go to the IRS website and get your EIN. You can pretty much get it immediately. Save a copy of that EIN for your records. It is really hard to get it if you lose track of it. The IRS does not have an easy way to look online for it. And you might have to be on the phone for many hours to get it if you lose it. So immediately what I do when I do this is I take a screenshot, however you got to do it, just so you see it. Usually you can just immediately download a PDF of it and save it. I would save it everywhere you can so that you do not lose track of it, just because it's a pain if you do. And then all businesses should register with City of Portland. So that's, again, only if you are within the district, and you would just look it up with your zip code to figure out if you are. And again, I also don't care very much if clients do this every time they start a business. I feel like when we do your taxes, there will be a form that we file if you are within that jurisdiction, either exempting you from the tax, or you might have to pay. And I'll talk about the details of that tax later. They want us to have you register. I don't think it's an emergency. I think all these other steps are way more important, but I just I don't want to avoid naming it. And then once you have the acceptance from the Secretary of State and your EIN, you can open your bank account for the business. If you're a sole proprietor and you're just using your name, you could just open a separate personal. And there's a question from Laura. Oh, I see it. Is that the question you were trying to get me to see in the chat, or?
Yeah, I just typed it in. I was just saying that, so a lot of the folks on this call today live over here on the west side, in
Yes.
Beaverton and Hillsborough. So I just was asking, like, does that apply also for cities over here? Like, would you have to register with cities?
So the Oregon Secretary of State, yes. The IRS, yes, if you're doing those steps. The city of Portland, it depends on your zip code. So later on, I have the link so you can look up your zip code and it will tell you if you fall into any of those. I don't know of any specific that I've found other local taxes to being in Tigard or being in Hillsborough. But I do know TriMet District is also Lane County. So if you're falling either of those places, which those zip codes can be broad, so I would just look. But if you know for sure you're not, then it won't apply to you. But that doesn't mean at some point you won't have to do those taxes. So it's because I don't know where people are necessarily coming from. I kind of talk about the things that I see the most, and then it just might not apply to you. But it's a good thing to ask around. What are other local taxes? Because it's sometimes really hard to find.
Great, thank you.
And then, yeah, for sure. Good question. And then Deb, regarding income as a sole proprietor, is there an annual income amount that you do not need to file taxes? I mean, technically, if you're trying to do business, at $400 of income, you start triggering self-employment tax, which I think is the next slide or within a couple of slides. So the IRS, it's like a very small window where they're like, you don't have to claim anything. So to me, I would just keep track for yourself, because also what if you're spending a bunch of money trying to get your business off the ground and then you spend more than you're making and now you have a loss, and that loss becomes part of your big tax return, right? So say you have a W-2 from a job and then you have a side hustle that you're working and you actually are spending more trying to get that side hustle off the ground, which is typical, than you're making. Well, then when you do your taxes and all of that data falls onto one tax return, it all falls on Form 1040, you're going to have your income from your job and your loss from your business, and that loss will actually pull down your taxable income, which could lead to owing less or getting a refund. So again, that's just strategy. And it's, to me, I'd rather you keep everything and treat it as such, and then make a decision, an informed decision when you do your taxes. But no one, the IRS wouldn't say, don't worry about it, right? But again, a lot of people just don't claim things. A lot of people don't do the things as they are supposed to do. And that's your decision. My job is to inform you, and I allow you to do what you need to do within that. Great, I'm glad that helps. Okay, let's keep going. Taxes are a pay-as-you-earn system. So we kind of talked about that when you're an employee, it's passively happening for you, right? Because you get paid and your employer takes the money out of the check and then they pay it on a quarterly schedule, for example, to the different departments. When you work for yourself, no one's doing that. So what taxes do you pay? How do you pay them? And when do you pay them? And so these are things that we're going to talk about throughout. Oregon-based businesses. So again, not all of you will fall into this depending on where you live. I realize this is hosted by, a Beaverton organization, but a lot of people live in other areas. So I just want to name the ones that I see the most when I do taxes as a Portland tax preparer. Federal income tax, state income tax, Social Security, Medicare tax, TriMet tax. So again, this is TriMet Lane County. You may or may not fall within it. If you don't, great, you don't have to worry about it. And I have the link later on so you can check. City of Portland, Multnomah County tax, payroll taxes if you have your employees yourself, the supportive housing services and preschool for all tax. Again, that's going to be specific to like a Multnomah County and a metro area. But you want to be mindful if you ever fall within that these taxes are out there. And then personal property taxes if you have $19,000 or more in business assets. Rarely do I see that. I mostly work with service-based small business. I have some restaurants I work with, and I work with like a print shop or two. So they might have like really big presses, right? Or restaurant equipment. They're going to have to worry about the personal property tax. Again, this is one that doesn't affect most of my clients, but I also just like to name it. It's its own form that you fill out. It's not a very high tax, but I just want you to be aware of it. Again, how is one expected to succeed when there's 9 possible taxes you may be eligible for at any given time? I feel overwhelmed by it, and it's what I do for work. So again, do your best. And the IRS does value you doing your best. Oregon, honestly, is a bit stricter and harder to deal with. And so if you have to pay one of them first, Oregon is the one I would take care of. The IRS will work with you and be more reasonable. They also, all of them care more about you communicating with them than necessarily you paying them in a timely manner. So payroll taxes is one thing. That one is very specific. So if you're doing payroll, make sure you have support there. But when it comes to income taxes like federal and state, just be mindful. Just because you can't pay it, but you need to file, just communicate with them. You can work out payment plans and things, and I will mention that later. But the filing part is the part that they penalize the highest if you don't do it. Something to be mindful of is that federal, state, Social Security, Medicare tax, all of these taxes are considered personal income taxes. So they're calculated on your business profit, which is your business income after expenses are taken, but they're not a business tax per se. So there's no write-off. You don't get to pay them and then take them as an expense later on. The ones you get to do that with are TriMet, City of Portland, any of these like local small business taxes, those will be deductible in future years. And there's more details about these later as well. So taxes for the self-employed or more. I have this slide mostly to illustrate the importance of expense tracking and record keeping. So when you're self-employed, you actually pay more Social Security and Medicare tax proportionally on your income. So when you work for somebody else and say you have a job and you get paid $10,000, and I use this round number because it helps to illustrate it for like a non-numbers kind of person. So if you make $10,000 from an employer, then incrementally throughout the year, they're going to take out about 7.5 cents of every single dollar and pay it towards your Social Security and Medicare. Social Security is 6.2%, Medicare is around 1.5%. Social Security taps out at like 120 something thousand dollars of earnings. We don't have to worry about that right now. But at $10,000, you're going to pay about $750, and it'll come out incrementally and paid on your behalf. Your employer actually on the back end matches that for you. So they pay in as well $750 between Social Security and Medicare. When you work for yourself, no one's paying either half, and you're getting dinged with both. So if $10,000 is your business profit, the expectation is that 15% of that is going to go towards Social Security and Medicare tax. That is a lot different than 7.5%, right? So already you might be behind because you didn't even realize you had to do this. Now we're talking about a tax that is now double. If this is the only income you have on your tax return, federal income tax, there will not be any. You will be liable for earned income credit. You'll be liable for other credits that will kick in and help, but you still will probably end up owing a little bit of tax based on this, which also is kind of wild to think about on such a small amount of money. So that's why we want to keep you tracking your expenses, because the more expenses you have, the less tax you're going to owe. So this whole slide is about, right? So it's not about necessarily scaring you. It's just about letting you know that it feels like a lot, because it is a lot. And so the more we get you to keep track of things, the more you get to hold on to the actual money that you're making and keep it within your own community and with your own family. So we're going to spend a lot of time talking about expenses. And then in a couple of more slides, we'll take a little break. But please ask me questions if anything comes up for you. So what do we mean by income for self-employed and small businesses? Income comes in various forms. So it's when you're selling goods or services for cash, for a check, credit card, PayPal, Venmo, Square Cash, any of these taxable grants, like the Regional Arts and Cultural Council is one that a lot of folks I know get grants from. Those are generally taxable. Crowdfunding. So if you're crowdfunding, you're going to do an illustration and you're for a book and you're crowdfunding for the book, and it's part of your business. That's taxable income. There's some kind of exchange going on there. Gallery sales, Etsy sales, freelance design, any of those types of money, that's income. Whether you get a form or not, that's technically taxable income according to the IRS regulations. So if you don't get a 1099 though, what you need to understand is that the IRS does not know about it, nor does Oregon. So if you don't actually get a 1099 form, they don't know. It's only once you get the 1099 form that they have that living record that you had some kind of expectation of business income. So if one were to order, it's called a wage and income transcript. And there's a link to it on my website as well. So I was talking to someone who had some back taxes, and usually the first thing I'll do is I want them to order a wage and income transcript for all the years in question that they need to file to see what the IRS knows. I'm kind of like, let's just start there and make sure we're not missing anything. So people will say, if I don't get a 1099, then do I just not claim it? And I'm like, well, that's up to you. Like technically that money is traceable. Technically, if someone audited you and they found that you made all this money and you didn't claim it, that would be a problem, right? So we are self-reporting our expenses and our income as self-employed people. And that is on you to decide. No money is really untraceable unless it is cash that never goes into a bank account. Like everything else is traceable. So if people tell me it's a personal Venmo or it's this or it's that, it's still ultimately traceable. Blockchain, Bitcoin, I would talk to somebody else about it, because at this point, it has gotten to a level of complexity where I can handle it when it's just like a stock sale. Basically, when people buy stocks, you buy a stock, the price goes up or down, you sell it, and then there's a tax consequence. But this is actually very complicated. So if you're using blockchain, NFTs, anything like that, the most recent federal update class I took, the CPA was very strictly saying, like, please seek someone to talk to about it. It is complicated, and it is definitely an area that will be strongly looked at by the IRS. So that's a really good question, because people need to start thinking about that. And as a tax person, there's certain things where I just turn away because I can't, I can't learn that much. There's just so much to learn about. Like, just when, like, the legalization of marijuana, for me, there's so many specific rules about that. So if you're interested in getting involved in industries that are kind of cutting edge and new, you're going to want to find someone to talk to about it, because you're going to want to make sure that you can comply in a way that doesn't, like, hurt your business over the long run. So not income for the self-employed. So investing money in your business. So putting money into your business is not income. And just like taking money out to pay yourself is not an expense. And I added a slide at the end to talk about, like, owner pay. But I just want to make that really clear, because I've seen before when people give me their information for taxes that sometimes I'll say, what's this number you're sharing with me? And they said, oh, this was a gift. And I put it in my business account, like a birthday gift of $100 or something. And I'll say, well, that's not taxable. That's you just putting money into your business. That's fine. And just as when you take it out, it's not an expense. So just want to make that clear. Loans. So if you receive a loan for your business, like the EIDL loan that happened due to, like, SBA funding from the pandemic, if you get a business loan, a line of credit, that is not income. But also when you pay off the loan, that is not expense. The real effect there is that you just have more or less cash flow. That's it. But it's not going to affect your actual taxes. It might affect the amount of money you have to pay the taxes, but it doesn't affect the taxes. And individual development accounts. So this is something to pay attention to. This is for Oregon-based businesses. Also, they have them for people buying a home, and they have it for education expenses. Individual development accounts are incredible. There are these matching accounts where you save so much money and get it matched potentially 3-to-1. I think they're upwards of like $7,000 or so right now that you could get matched. And all the money you save for your IDA, you actually get an Oregon tax subtraction when you save the money. So you get benefits all over the place. You put money in, you get a savings on your Oregon taxes. You get it matched. It's not income, it's a gift. They are very explicit that it's a gift. You can spend all of it on business expenses and write them off. So it's like multiple levels of benefits to a business owner. And there are, I think there's income limitations to accessing them, right? There's going to be some kind of relationship with a nonprofit that offers them. Mercy Corps, MISO, other organizations do it. And I have the locator later on in the slideshow. I added the link so that you could tap on that and see where the locator is around you. And actually, no, this is it. That's actually the link. I added that earlier today. Yeah, this thing should be live. Okay, so look at the idea. It's an incredible program. I have a lot of clients with success there getting their business off the ground, and it's not something that's in every state. Expenses for the self-employed. So I put the IRS language here just because it's so vague, and I just want you to like experience it. To be deductible, a business expense must be both ordinary and necessary. That's just, what does that even mean, right? Everybody's story is going to be different. Every single business is going to have to fit into whatever that means. So they have, they say it's not too lavish, it's not too this, but lavish is going to be relative to your experience. And so I would say, just remember, the IRS is vague as well. There's a lot of gray area in tax. Even though it feels like there's a right and a wrong, there's a lot of gray and a lot of interpretation. June Walker does an incredible explanation of business expenses and her way of looking at it. She's been doing tax for decades. She's a wonderful resource for small business. She really helped me get off the ground, referencing her manuals and things like that in her blog, really helped me understand how to support small business owners. She says, in other words, it's anything you do that relates to your work. It stimulates or enhances your business, nurtures your professional creativity, improves your skills, wins you recognition, or increases your chances of making a sale, could be a possible business expense and therefore deductible. So that helps kind of like flesh out that story a little bit. And then thanks for sharing that IDA link. Whoa. There we go. Steps for maximizing expenses. So again, the expenses are key here. And my suggestions around expenses are not to encourage you to buy things you don't need. I'm never going to tell you to spend money on things that are unnecessary, right? But how do we spend money on things that we are going to do anyway and have that be a business forward experience? So if we have to eat, is this a business meal, right? If I need to visit a family member in New York, how does that become a business trip first and foremost? Like it's not about spending money on things that are unnecessary, right? It's just that how do we switch the narrative? So steps for maximizing business expenses, first and foremost, it's changing your mindset. And that's part of the bank account for me, is that having a separate bank account, whether it be a second personal one or a business one, you really have to be mindful of the moment and decide, am I using this card or this card? What kind of transaction is this, right? Whereas if everything's mixed together, it's going to be really hard to discern. I've tried before. I had like a side hustle and I really tried to like just mix it all in, and I could not remember anything. So I had like a little bank account set up for like my teaching gigs or something, and it was very few expenses and income, but luckily my credit union was very generous and they didn't charge me for the account. So it was perfect because it did all of my bookkeeping for me. That's what I used when I received money for workshops, and that's what I used when I spent money to do the workshops. And it was really easy bookkeeping. Defining your business broadly is kind of one thing that I say. And I mostly say this, especially in creative circles, because a lot of creative folks do a lot of things. You're creative, right? So sometimes you're teaching, sometimes you are making something and selling it. Sometimes you're making music, sometimes you're illustrating, sometimes you're doing a zine. There's all kinds of creative endeavors you might have. I don't feel the need to have people track everything separate. To me, that's very time consuming. It can become very expensive because whenever you do your taxes, the more forms you have generally makes it more expensive. So to streamline, to simplify, to save you time and therefore money, I might do like a broad name, like a multimedia artist for somebody, when I'm trying to categorize their business and explain it. I wouldn't do that if the two things you do is that you're a jeweler and you're a plumber, right? Like those are very unrelated. You might be doing both of them, but they're very unrelated. So I would want to track those both separately because the income and expenses are not going to make sense, right? And part of what happens with an audit, from my understanding, I will say this, in over 10 years of doing tax, I do over 300 returns a year with small business, primarily. No audit yet. But that doesn't mean it's not going to happen. And so I have to prepare every single person I work with for that to happen. Because if it does, we don't want this to become a crisis for them. We want them to be able to advocate for themselves. We want people to understand why they did this on their tax return, where the records are, and how to explain it. And at the end of the day, if what happens is that you go through an audit and you did claim everything, you thought you did it correctly, but maybe you overclaim some expenses because you wrote off a trip that you went on and the auditor says you can't take that, what's the worst that's going to happen? So it's $1,000 of expenses. From my understanding, you're not going to owe $10,000 now. They're going to make you pay tax on that $1,000, and they're probably going to charge you penalties and interest for the tax you owe. It is unlikely that it's going to be now suddenly you owe all of this money. Now we're going back 10 years. The horror stories you might hear about tax-wise are going to be the ones where someone doesn't claim hundreds of thousands of dollars of income, right? Or maybe they're inflating expenses in a way that is they can't prove. But again, like a lot of small business, the numbers are so small already that I wouldn't like stress it too much. I wouldn't not take the expense because you can't find the receipt. If you knew you bought that thing on Craigslist, but you can't find a receipt and you didn't write it down, but you remember it was $100, just go ahead and take it. Worst comes to worst, you have to explain yourself if you get audited, which is again, not likely. So just something to remember about the self-reporting, about the advocacy for yourself, because if you don't claim the expense and you owe tax, no one's going to write you and say, you could have claimed some more expenses. If you get audited and they find expenses that were missing, they'll let you take them in that moment. But no one's offering you that as you open up a business. Here's a welcome packet. Let's tell you the story of how to be a business owner and how to navigate this complex world of taxes. No one's offering that. So we just do the best we can with what we have. Work life versus personal life, another thing that's very hard to discern when you are a small business owner because everything feels really connected. I mean, I do tax for pretty much everybody I know. Everywhere I go becomes me doing taxes for people. So I have written off going to events before. I have written off meals with friends, but those friends are my clients and it's a tax meeting, right? So just being mindful that just because you think there has to be this hard line, it might not be. And then how do we draw those kind of lines that make sense? A lot of people have businesses with their partners. And so that one's a tough one because they'll say, but we're always talking about business. And I'm like, yes, I get that. What I would say is come up with a schedule. Like, we do business lunches twice a week. We do this once a month, whatever it is. Like, my business partner and I luckily love each other very much. So we have retreats that we go on. We do like quarterly retreats. I'm fine with our business paying for that to happen, for us to rent a place and for us to go and be together and get our work done. And I feel like I could easily argue the importance of that to my business. So that's on y'all to decide. But I think the regularity of it is really helpful should you ever have to explain it. Types of expenses. So these, we're really close to a break. Types of expenses, these are the ones that are pretty standard, that usually don't require a lot of conversation. And if you remember, I mentioned the Schedule C form, and that's the tax form that the sole proprietor, DBA, and single member LLC all file. And it's just one form that's part of the 1040, which is your personal taxes. It is a one page. So there's a limited amount of expense categories that the IRS allows you to use to report your expenses on. And every business, again, has to use them. So even though the language doesn't necessarily work for you specifically, this is what we have to deal with. There is one section that says other expenses, and it goes to a second page of the Schedule C form if you end up using it. And it ends up having like a listing where you can itemize out additional categories. If you do that, call them something. I would really deter you from using miscellaneous, uncategorized, other. I think it's a really good idea to pick a category and stick with it and be consistent. One of the ones I put there often is subscriptions. So subscriptions are something that is not on the tax return yet. Clearly, almost everyone is paying a subscription of some kind. So I usually add that on that other expense line item. And for example, that would be Creative Cloud, Dropbox, OnePass, etc. I'm just going to look at this. What about your time spent on marketing? So your time doesn't matter to the IRS. Your time doesn't matter at all. If you think about it, it makes sense because there'd have to be a standard, right? Because how do we decide what value someone's time has over somebody else's? So any labor that you're doing for free is not going to count anywhere. But if you're doing volunteer labor, for example, so say you're volunteering as an accountant, I do free taxes for some organization, but I incur costs to do those taxes. So I'm paying my insurance, my software is costing me, I travel somewhere, whatever costs I incur, those physical costs I can deduct as business expenses, even though I wasn't paid, but I can't write my rate down as a business expense. So that's something to consider. With everyone moving to working from home, yes, I will talk about home office later on in a couple more slides. You'll get me there. So advertising, that's going to be business cards, website, Facebook, Instagram ads, et cetera, et cetera. Meetings and things, that's not what they mean by advertising. That would be more like meals. But advertising would be actually those costs. Legal and professional, hiring me, hiring a lawyer, mental health practitioner, hiring a supervisor, consulting, etc. Fees. So any fees you incur for your bank, right? So if you have business banking or you have a separate account, ATM fees, bank fees, credit card fees, PayPal fees, Square fees. So when you get paid by somebody and a fee is charged, you don't pay taxes on the whole amount. You pay taxes after the fee is taken out. That's a business expense. Supplies. So supplies and office expenses are generally interchangeable for a lot of people. I might say just supplies for someone would be, it's hard to say because in my business, they are interchangeable, like a new mouse or like a notebook, paper. Like I'd probably just call that office expenses. General supplies might be a hammer for someone, right? So someone who has a hammer, or pliers for a jeweler or something. So just lower cost items, pretty much consumables. That's what I'd call supplies. Office expenses is clear. Subscriptions we talked about. Another category that's not listed, but that I tend to add is education and research. So that's going to be continuing education. So if you were paying for this class, for example, I would say that would be legit. For me to do any of my continuing ed as a tax person, that would be deductible. Anything to maintain your license, et cetera, as well as your knowledge, workshops, books, et cetera. Something just to make a clear distinction with is that the education to get the license, to be the thing, is not deductible as a business expense. So all the education it took to get me to where I am, to become a self-employed tax preparer, not deductible. Now that I am a self-employed tax preparer, all of it is, including getting new licenses, including getting education to add to what I can do, right? So it's like adding extra. I have helped people write off higher education before who have already been in business for some number of years, and getting an additional degree helped them with their business. It wasn't a new career, it was the same career, but kind of extra. I've done that before for people and it worked out, but just something to be mindful of. Insurance, like business insurance, workers' comp insurance, liability insurance, malpractice insurance, health insurance, I do want you to keep track of if you're paying out of pocket and you're self-employed. There's kind of an extra thing we can do with that on the tax return, and any software will ask you about that, but it's not a business expense exactly. There is a deduction, but it doesn't give you a full deduction. Rent. So someone had asked the question about home office. Yes. Home office is going to be separate. It goes on a separate form entirely, but your studio rent. So this is any rent for space outside your home. It could be something temporary, like you rent a booth for an event. It could also be some equipment storage, right? Like you have a storage unit, and it could also be a studio space. It could be a chair in a salon. It could be a table at a tattoo studio. It's any of these things that you're paying for to do business out of. But also you could do a home office. Taxes and licenses. So again, the cost to register your business, that $50 every other year, the $100 is an LLC, local taxes if you are subject to them. And then also licensing around professional licensing. If you have to renew a license every year, that would definitely be deductible. And then utilities, that's going to be for that space you rent outside your home. But also I usually take people's personal cell phone, if that they only have one, which most people do only have one. If they use it for business and personal, I ask them to give me like a percentage of use for business. And I allow you to decide that for yourself. So some people do 10%, some people do 80%. It just depends on what you think is reasonable. And then internet as well. So in the past, when it was just landlines, the first landline you had was never allowed to be deducted. It was only allowed to be if you had a second one. Cell phone doesn't really work that way, right? Because you can have a second line on the same cell phone. Like I have a business line on my one cell phone. So it's really, you pick what you feel comfortable with and what you could argue. And then internet, the same, your personal internet. Home office has like a way to deduct a portion of your utilities and your rent or mortgage interest. I separate out internet because internet to me isn't specific to an area or a square footage. There's like a use to the internet. And if you are really, if you are doing something on the computer all the time, you're a coder, you have to be on the internet all the time. So I think your percentage of your internet use might be more than the fact that you only have like a small space in your home that you do your work from. So I just try to get people the maximum amount that I can. I'm going to keep going. This one is only going to really apply to people who are selling things, and especially people who make and sell things. This isn't going to be if you're selling digital things, like not a tangible thing. You can sell something through the internet, but like I'm actually talking about tangible things. You're a bag maker, you're a wallet maker, you're a jeweler, you do vintage resale, right? You are a restaurant. Cost of goods are the things that end up leaving your business and going to your customer. It includes the packaging. So that whole finished product, whatever is leaving you and going to be sold, that's what I'm talking about. So the first thing is to distinguish between a supply and a cost of goods so we can have the same conversation and starting point. In this example, we'll say it's a wallet making company, wallets and keychains. So the mallet is going to be a supply. We're not selling mallets. We're not making and selling mallets, right? So this is just a supply. Scissors, just a supply. The D-rings are going to be part of the finished product that leaves the shop. So that is going to be a cost of goods. Same with this almost made wallet. That's all comprised of raw materials, and eventually it will be a finished product. And what really matters to us is the cost to you as a business owner to purchase these items. Same with the jute, these parts of the keychain. So here's some math. I don't have math that often on this, but I have to do it for cost of goods. And then I'll explain why, because I did have an example. I learn a lot from my clients, and I had a client that I worked with that had like an unfortunate experience with this. And I wanted to make sure that we avoided that happening in the future. I also want to name that as a business, I forget what the cap is. It's like a few $1 million of gross sales. If you don't make a few $1 million of total sales, which is like, I don't know if I have any clients that do, you actually don't have to do this at all. Like there's no requirement to report this. However, it is meaningful information to you as a business owner to know the cost of goods and the percentages and your profit margins. That is really important. So I'm really speaking to you as a business owner and what's going to matter to you. And that comes from experience as well, because I do work with a bag maker. And in order to, at one point, get a loan for scaling their business, and at another time to work with a pretty big distributor of patterns, because they also made patterns, they needed to have a very strong profit and loss statement that showed that cost of goods and which patterns were moving and which ones weren't, et cetera. They needed that data in order to get a really big sale. And because they had done such a good job doing their bookkeeping, it was relatively easy for them to have that information. So that's another kind of reason why having this information, I know it seems like a lot. And if you do sell things, maybe you have never thought about this before, you're not wrong. You didn't do anything wrong. It is totally fine if you ignore this entirely. But what happens to the one time when it does matter? What happens when you do scale? What happens when you have a business that's making that kind of money? It's really good to have this information. So for example, you start a business, and we're going to say it's a bag maker. January 1st of 2021, you had no cost of goods at all, no inventory, no nothing. Throughout the year, you buy stuff because you're building inventory. So you buy fabric, you buy hardware, you buy packaging. And at the end of the year, you look around and add up everything that's left over on December 31st. You just look around wherever your space is and you add up how many bolts of wax canvas you have or how much hardware you have, and you add it all up at just the cost to you. This includes a finished bag that hasn't moved yet. You haven't sold it yet. So you add up just the value of the cost of it to you. So you take the starting inventory, you add all the purchases throughout the year, and we get a number. It's $2,700. Then you take the ending inventory and subtract it from the total cost of goods, since the leftover inventory has not sold. So it's still on the floor. You still own it. The beginning inventory plus all the purchases minus the ending inventory is what your cost of goods sold expense will be on your taxes. So that means you're allowed to write off $1,000 of cost of goods, but not the full $2,700, because you still have $1,700 on the floor. So that means you have $1,700 essentially worth of income. For a business of this size, probably it won't make a huge impact, because this is only part of it. Then there's also all the other expenses, right? The rent for the studio and contractor costs, et cetera, et cetera. There might be a ton of other expenses that you have. But when we scale it, for example, I had a bike shop that I worked with, and the first year when they opened was in the winter, right? They opened in winter of 1 year. And I didn't actually do their taxes the first year. I'm not even just saying that to make myself look better. I really didn't do their taxes. They came to me the second year. And they started in November, they opened up. They had very little stuff that they bought, because it's Oregon in the winter, no one's going to bike shops. So they start the year with nothing of inventory. They buy some stuff, maybe like $5,000 worth of stuff. That's what they ended the year with. Very little impact. Start the next year, they have the 5,000 that they ended with. Well, they bought like $20,000 worth of stuff that year. And they still had quite a bit on the floor at the end of the year. And the difference between what they started with and what they ended with was so significant that now we're talking about $10,000 worth of income they weren't prepared for. So that's what I'm talking about, is that it's important to be aware of this. If you've never done it, if you don't intend to do it, it's probably fine. But I do think it's meaningful for your record keeping to see that and to see what's on the floor. And that's the reason why car lots have end of year sales. That's why everyone has closeout sales, is because they're trying to get the dead stock off the floor. They want to get rid of it. So you also might find good deals on things that will benefit your business. And if it's worth it, go buy it, just so you know there might be some kind of impact. Again, though, I don't know that I've ever heard of anyone looking at someone's inventory and counting it. Like, I haven't heard of an IRS agent coming and saying, like, I don't know how many bolts of fabric, I'm weighing someone's silver or something, like it's not likely, but this is more for you than for that. Also, if you have a limited amount of space, you can only have so much stuff. So usually after the first couple of years, you level up. You can only fit so many coffee cups and so many coffee beans at your coffee shop at any given time. You're probably going to have a similar beginning and ending balance or inventory. It's going to have very little impact on you ultimately. But again, one of those things, it's really important to say, because the one person it matters to, it was worth mentioning it. This is the 5-minute break. That's my dog, Francis. So I just got to go feed her and let her out, and I will come back. I don't know if there's any like hold situation. This is my first time ever taking a break.
Everybody, we can just go ahead. It's 5:03 right now. So let's go ahead and return and get started again at 5:08. In the meantime, just mute and turn off your video to maintain privacy.
Thank you, everyone.
All right, everyone. I think we should just go ahead and get back into it. So, Jenna,
Yeah,
take it
thank
away.
you.
Uh-huh.
Franny thanks you too because she got to eat dinner. All right, here we go. So we broke down supplies and office supplies, supplies versus cost of goods. The next thing that kind of gets lumped in sometimes is equipment. And so the way that we want to handle equipment, when we say equipment, we're talking about larger ticket items. It could be furniture, it could be equipment, it could be an appliance, depending on the situation that you're in. I have my clients segregate the like $1,000 items and more as like a separate type of category. Because these are handled a little bit differently on tax. So you have the option, instead of just taking it as an expense in one year, in the year you bought it, or spreading that expense out over a number of years. Generally, we're talking about 5 or 7 years in small business. So 5 years tends to be like electronics, computers, etc. 7 years is more like equipment, furniture, and things like that. Those are the depreciable lives. This is called depreciation. It's just literally writing off something over a longer period of time versus the first year. And where this might come in handy is, for example, that print shop I was saying. I have a client who's a printer and they bought a large print press. Well, this is like a $30,000 or more item that they got a loan in order to buy it. So in the year they bought it, if they expense all of it that first year, that would be great on their taxes. They'd have a huge expense and maybe result in large refunds. But then what about all the following years where they're paying it off and they get to take nothing? So and they're actually making money off of it, right? So for them, it made more sense. I kind of broke down their options and said, well, if you do it this way, or this way, this is what it's going to look like moving forward. And for them, it made more sense to kind of delay that expense and slowly take it over time as opposed to all at once. If you're in a position that you're buying a large piece of equipment like that, I'm hoping that you're talking to an accounting type person, a tax preparer, CPA, whatever, to get some support around it. For smaller items, $1,000 is not a little amount of money. And so with some of the businesses I work with, we really want to just make sure to strategize. And some of them, when they start that first year, you might be spending a bunch of money on equipment to get ready to grow your business, and you might have very little income. So you might want to get the full value of those expenses during the use of them when you're starting to make money. So it helps keep that profit down, that taxation. And I see people benefiting from this strategy. However, sometimes when you're trying to use like a free tax software or a service, they can't handle depreciation. Like they don't have the skill or capability to do it. If that's the case and this becomes a barrier for you, then I'd probably just say call it supplies. If you're in a position to buy, $3,000 or $4,000 worth of equipment, you might want to get some extra help. But I don't want you to use this as a barrier. Like, well, Jenna said it's $1,000 and I have to depreciate it. It's okay if you don't, if it means that you can do your taxes in an accessible way. But I just want you to consider it as your business grows. Local meals. So this one, I separate local and travel. That'll be the next slide, because I'll explain on the travel slide. But local is going to be within town, right? It's not an overnight. You're in town. You're for business purposes. So it's a business meeting. And I really like for people to keep the receipts as often as they can. I want people to keep as many receipts as they can, digital or paper. If it's paper, put it in something, weatherproof, some kind of container. And I'll talk about saving receipts in a little bit. People will, say, well, if it's less than this much money, you don't have to keep it. And this and this. To me, I just want you to try and keep them and make a good habit of it. I have this thing that I use for my receipts, this random nasty little folder thing. Just it's on my desk. If I have paper, I just put it in there. I probably won't ever look at it again unless I get audited. It's not how I do my bookkeeping, but I keep it. Or I take a manila folder and I write the tax year on it and put them in there. I don't keep all of them. I rely for my bookkeeping on my bank statements, but if you get audited, they might ask you for actual receipts, and that's why we keep them. A lot of my clients, I'm sure, I don't do it 100%, but I also want to tell you what the expectation is. For 2021 and 2022, meals are a little different. And so normally when you add up all the costs for the meals expense, we actually have to cut it in half when we do your taxes. So if you spend $500 on meals, business meals for the year, you only get to take a $250 business meals expense. That's just how it goes. They cut it right in half. So sometimes, to get around that, I will try to help clients differentiate, like if someone's having a gallery opening and they have, it seems weird to talk about it now in like the pandemic world that we live in, because you're not really sharing food openly with people. But if one were to have, cheese or crackers or wine at this public event, I would probably call that more like supplies, because supplies are 100% deductible versus meals that are only 50%. So you can kind of get around these things a little bit when they're open to the public, when they're for sharing. A therapist that might have like tea around for clients and things, I'll be like, just call them office supplies. For 2021 and 2022, you can actually write off 100% of your meals. The IRS is pretty picky about it. They want it to be an actual like restaurant establishment. It's not just, you don't have to eat in there. It can be takeout, but it's not for like buying prepackaged food at like a grocery store. They want everyone to like differentiate between all these categories. I don't think it's ever going to happen. People are doing the best they can keeping track, but that's what they tell us to say, that if you buy a sandwich at a grocery store, they say that would be a 50% deductible meal. And there's going to be lines on the tax return for all of these. If you do what these folks are doing, it's going to be 100% deductible meal because they've ordered pizza and they had it delivered. So those are the rules around food. Any questions about that? Lots of times people say, how does anyone know that I was with someone or not? I don't know. I don't know how they would know, but the rule is me ordering delivery while I'm teaching this class. If I was like, I need to eat and I can't make food because I'm teaching, if I ordered delivery and I was asked about it, it couldn't technically be an expense because I'm by myself. Yes, I'm teaching. Maybe if we all decide we're going to have a work lunch, I think that would be totally reasonable. But again, who's going to know if you get audited? No one's going to know. So have a good story about what you're doing and why. Things that might look weird on your tax return is if you make $5,000 and you spend $7,000 on food. That's not going to look right. That balance is going to be off. So again, it's just thinking about what you're doing, how you're spending, and what the big picture looks like. Travel expenses. So again, a lot of people aren't traveling much right now and haven't been for a while, but if you are doing business-centered trips, right? I mentioned going to New York. I've done trips to Santa Cruz before, and it's interesting because I'm teaching for this art center next week online, but I'm a surfer. So I went to Santa Cruz. I was like, I really want to go get away and go surfing. And so I found an arts organization that wanted me to teach a class in person. I don't even remember if I charged for it or not at the time. Maybe I did, but I went and did a class. I had a flyer made up. And so I had to go to Santa Cruz to teach this class. It was pre like Zoom, Zoom chaos. And so I went in person. I got to surf. It was great, but I had to go for business. So I wrote off the trip for business. I wasn't gone for weeks or anything, but it felt justifiable to me. I wrote off the airfare, the lodging, rental car, bus, train, cab costs. If you're going for like a convention, if you're going for continuing ed, if you're going for a crafty wonderland, right? Writing off all the fees to go there, and meals as well. So the only difference with travel versus local is that with a per diem, you can choose a per diem. So for travel meals, if you're out of town for an overnight, you would definitely keep track of what you spent. But every year there's a set amount of per diem for most cities, like major cities across the country and around the world. And you can look this up, and I have the website here, and you can look up San Francisco and see what the daily rate is for food. And if it's more than what you spent, you can actually take that per diem rate. So it's one of the few times where everything is equal for everyone. Like this standard, anyone can use it, any size business, everybody gets to take the per diem rate. So if you find that you're not spending $50 a day on food, and I think the minimum is like, or if your city's not there, is around 50 something. If you're not spending that, you can still take it as an expense. That's amazing. That rarely happens. So it's just something to advocate for yourself. And the way that you keep track is keep a calendar of where you've been. And then you say, oh, I went to San Francisco for 5 days for this convention and I had a gallery opening or whatever. Add up what you spent and then see what's better. Is it the per diem or is it the money you actually spent? Lots of people mix business and personal. We're talking about that a lot. And so I used, there's an Instagram handle called Taxes for Artists. They're also like a small business in LA. It's a tax business. And they have a lot of free resources. And they kind of broke it down this way. I've never seen it broken down like this before. So it's not coming from the IRS's mouth, but I think it's reasonable. If a trip is more than 50% personal, what Taxes for Artists says is that the travel expenses are not deductible. So the airfare, lodging, etc. But individual expenses are. So you go to Chicago for 2 weeks and, for a trip, and you go meet with a client while you're there, but you have like a lunch. Well, being there for, 13 days for personal and 1 day for that lunch, if you tried to argue that, if you got audited again, it probably wouldn't fly, right? But the meal cost, the travel to and from the lunch, that would be deductible. If it's the reverse and you actually spend over 50% business and the rest personal, then you could kind of figure out that percentage. Is it 75% of the time is business and 25% is personal? Well, you apply that 75% business percentage to all the costs. It's reasonable. And then for traveling abroad, what they really say, if it's got to be at least 75% business or more to write off the business expenses. Thanks for sharing the Taxes for Artists as well. So yeah, I think again, it's like we're trying to just like squeeze out the maximum amount of expenses that we can from all these different situations. And Jenna, thank you so much for staying on camera. We also have the same name. That's hilarious. I met another Jenna today. I have in my whole life, I've never met Jenna's ever, nor seen the name on any keychain, anything when I was growing up. And today I literally, you and someone else I met today. Very cool. So studio and office, someone had mentioned that earlier. So office outside the home, we discussed, these are just some options of what that might look like. I do taxes for a lot of tattooers. So it would be renting a table from a tattoo shop and doing your work. Maybe an artist gallery, maybe a practice space for someone who plays music. Maybe it's your store, right? But also a lot of people work from home, and the majority of people, if not everyone, is doing that now. And our homes look very different, and there's an assumption that I think a lot of people have that the IRS will only allow you to take a home office if there is a door on the room, right? And that might be what is being said, or maybe it is even written. But for me, it is really problematic, and I would say classist, because the majority of people cannot afford to have a place with a door on a room, right? Some people live in a studio. Many people do. Many people live communally. Many people have multiple housemates, right? So why can't you still find a way to write off some portion of your rent, your utilities, et cetera, if you live in a way that is not considered, what conventional for the IRS? I have to ask my housemate to let my dog out. She needs help. She does not care about my schedule. She's got to pee. So I just want to make it clear that there is some place for you, and that's why the example I use is like a studio apartment, because I would say that I would do it based on a square footage percentage. So I would say my studio apartment's 400 square feet, and maybe 75 square feet is just for business. And I have a closet that I store things in, and then I have my desk and I have my work area. And that's the percentage I would apply. So I put 75 into 400, whatever that percentage is what I apply to my rent, my utilities, my repairs, my insurance, etc. If you have a desk, right, office supplies. And that's how I would make that work and try to, glean out as many expenses as I can. If you own a home, it's a little bit different because you have mortgage interest, property taxes, home depreciation, which is also a little bit more complicated. If all of that feels overwhelming, don't miss out that you can still take $5 a square foot. So if you don't want to do all the other calculations, you could do $5 times the square footage of the space you use just for your office. Just because you have to go to the bathroom while you're working, the bathroom is not considered part of it, right? Like communal areas are not. So, you just wouldn't tell an auditor, I work from my kitchen table. You would say, no, I have this area that I have my desk and blah, blah, blah. Like something reasonable is fine. A lot of my clients take like 5 to 15% of their space. And that's what they do to calculate the home office write-off. Auto. So again, the majority of my clients for this one do the mileage deduction. So that's on the left side. It's less steps. It's easier to track. It's not a lot of implications if you were to sell the car. Actual expenses are not as common, but I'm going to explain them both to you because they might be applicable. The mileage deduction, first you track your miles. So what we want to know is your business miles. So going to the post office, going to the bookstore to get the book, going to see a client, going on a business trip, etc. If your primary place of business, where you do the majority of your work, is your home office, then all your miles to and from your home that are work related will be tax deductible. You can keep track of that through MileIQ app, which is linked on the next screen. It's like $5 a month. You could have a notebook in the car. I use like Evernote app, which is, you know, free for me. And I just keep track of where I went and when. I also have a calendar. It's really whatever system works for you is the one that is best. But again, every time you keep track of those miles, it's money saved, because we take those miles, we multiply them by the standard mileage rate that's set every year, and it's over 50 cents a mile. So if you have 100 miles, that's over $50 in expenses you get to take on your tax return, which is wonderful. And that can add up really, really quickly. You have one business trip and suddenly we have a lot of expenses. So I just don't want to let that go to waste. You know, I don't want anyone to say, well, it's just this. Well, just this, why would you pay tax on that money? Right. And the more that you advocate for yourself in that way, the more money you get to hold on to instead of paying out in taxes when you didn't have to. Actual expenses is a little different. You still have to keep track of your miles, and we really want you keeping track of like all your miles, and then we want to know how much is business. I write commuting there because I want to make it clear driving to and from your day job is not deductible. So when I'm a home office, my commute is walking to my desk, right? So that's not factored in. But if I worked from a tax office and I was there full time and I was doing the majority of my work there, I couldn't really claim that my home office was my primary place of business. So to and from the office wouldn't be deductible. But if I went to a different location, if I went to go see a client or any of those other things, that would be. So that's another place that's gray, because everyone has to decide how that works for them. I've worked with people before who, for example, I worked with a florist who was like, I drive to and from my shop, but I have to deliver the flowers I have to pick up the flowers and bring them to the shop. I should be able to write that off. I can't afford to like hire a delivery driver or something. And I was like, I think that's a reasonable argument. Let's take the miles, you know, like it's only a problem if you get audited. So again, just think about what would be a reasonable argument within the law as I'm explaining it to you. So with the actual expenses, this is when we write off the value of the vehicle, we write off the gas, the oil, the registration, etc. But we only do it based on a percentage of business use. So the way we figure it out is on miles, right? So we have business miles, we have personal miles or non-deductible miles. However they relate to one another, we apply that percentage, much like the home office, much like internet, much like your phone. It works out really well for gas guzzling vehicles and vehicles that you tend to use mostly for business. So the clients I have that do actual expenses that have a business vehicle oftentimes have another vehicle. And oftentimes that vehicle we do actual expenses for is a van, is a truck, right? Because those cost a lot of money to run. You're not getting the full value of the deduction if you do mileage, because they're really expensive to run and you're not driving them very far. But when you have something like a Prius, you have something that's really fuel efficient, the mileage deduction tends to work a lot better because those don't tend to cost as much to run. Also, if you do the actual, we do have tax implications for sure if you're ever to sell it. So again, it's not to deter you, but it is a lot more work to keep track of. And generally, unless you have like a specific work vehicle, it doesn't actually work out that well. It might feel really good when you buy a vehicle to be like, I'm going to write it off. And that's how people usually approach me with it. And I'm like, yeah, let me show you what this might look like big picture. And when I tell them, they're like, I get it. Same thing with the print press I mentioned. Like, yes, this year that $30,000 press would make a great expense. But if I do that now, I'm going to be in trouble moving forward. And it really takes that. And that's where a tax person comes in handy. I shouldn't have to do this work. It shouldn't be this complicated, but it is. And so that's where we come in to say, this is how you do it. These are your options. We're almost done. Record keeping. So keeping track of income and expenses, keep your receipts. So like I said earlier, I tell people 7 years. If you're a small business, I know that seems like a lot, but if you have good habits and it's really not that big of a deal, have like some kind of weatherproofed container of some kind, have a folder for the year, dump them in there. If you have the separate bank account and you have good record keeping, you shouldn't have to look at the receipts and add them up. You know, you should not have to do that. They should only be backup proof in case you get audited. I have like an email folder every year, my 2022 tax year receipts, my 2021 tax year receipts, and I just dump them in there because a lot of receipts at this point are emailed or texted, right? Or take a picture and email it to yourself. There's also scanning apps that you can use for receipts. Open a bank account, right? So that could be a business specific account, or it could be a personal account that you use for business. But I would 100% tell you to do this anytime because it is so helpful for tracking. Use a calendar. Again, that's a great tool. My calendar tells me where I'm supposed to be every day, and that also happens to track my business whereabouts. So if I were to get audited, it would be very clear why I had to drive to the office supply store, why I went to my business partner's house, why when we went to the beach this time, it was for our quarterly retreat. And then tools. So I mentioned Mile IQ. I have a spreadsheet I'm going to show you next, and I have a link for that. Wave app is my new favorite thing. I'm like, this is like my Oprah moment or something. Like Wave app is incredible. It is free. I would say if you're interested in learning about how to do record keeping through software, start one just for yourself personally. That's what I did to learn how to use it. I made one for myself, which as a tax person doing my own bookkeeping is like horrible, but Wave app is really easy and it's free, and it's not QuickBooks, and QuickBooks is owned by Intuit, and Intuit as a corporation is really hard for me to deal with. They make things that should be free. They make it really hard for people to do taxes for free. They make it really hard the bookkeeping, the prices go up all the time. They're trying to get everyone off QuickBooks Desktop, which is a set rate, move them and forcibly get them on this online subscription where you're kind of stuck, and they keep raising the price. QuickBooks Online, I've used it forever because it is accessible. It has worked for my clients, but the fact that there's a free option where I know that people will be able to understand it well, and it actually is much more intuitive, even though that's the name of the QuickBooks company, like Wave is more intuitive. So I have a little tutorial that I've been building, and I want to do a slide presentation. The library is going to have me make one that they will have on file kind of, but I can share the link with you all if you're interested afterwards. And it shows you how to use the Wave app. It's great. And it works by connecting to a bank account. So that's why you want to have that separate account instead of sifting through all your personal stuff and your business stuff. You just want to look at the business stuff. And then paper is fine too. I've had clients give me paper, and that's what they do. They write everything down for their income and expenses. And if that's what works for you, that's totally fine. The spreadsheet, you don't have to see all the detail of it. I know this is not a great image of it, but I do have a link, and Mercy Corps, the nonprofit, helped me make this and have my clients use it. And so what this does is you would enter your transactions. Every single month of the year is represented in the same image. And then there's equations built in that will do the math for you and add up your annual income and expenses. And so the last sheet is going to be a profit and loss statement for every single month of the year that you fill in, and it'll add them all up annually. So it's going to give you all the data you need. It is free. You can download it anytime. So every single line on this spreadsheet is, and this is downloadable from my website from the resources page. The whole self-employment section has this. It has a video I've done. It has a lot of the resources I've shared. Every single line is a transaction. So you put the date in the left column, then you put a description, and this is up to you what you share. If it's income, it goes in the green column. If it's an expense, it goes in these blue columns, and these are all expense categories. And they're the kind of generic ones we spoke about today. There are some areas for like other and to make your own category. I would just say put some information in the description so that we can kind of figure out what it is if you're not sure where to put it. And then it's going to do the math for you. And then what it will create is this income and expense statement for every single month of the year and then annually. So this is a great tool. A lot of my kind of tech averse clients have really found this to be helpful for them. Even if there's a lot of data to enter, it works really well for them. I think the only issue is it's easier to lose information here if you don't save it properly, if you erase something by accident. That's why the software for me is a little bit more foolproof. But again, I don't want anyone to feel like they're doing it wrong because this doesn't speak to them. So profit and loss is a listing of your income and expenses. For the short term, it tracks your profit margins, which we talked about earlier. It helps you tell if you're charging enough. It helps you tell if which months you're slow and which months you're busy, and if you should change the way your business is in certain months of the year, or if you're always going to be slow in August, maybe you take time off then. Maybe you work on your website and your internal things then, right? So like it helps you really see the different flows in your business over time and trends. For long term, it helps you with tax preparation, retirement savings, planning for your future. For me, when my clients do this data entry, most of them know what their taxes are going to look like at the end of the year. Like I'm doing estimates for them and I'm looking at these numbers and I'm plugging them into like a fake tax return. And I'm telling them, well, based on what you're showing me on your self-employment, you're probably going to owe around this much. Maybe you should buy some of those expenses before the end of the year, right? Maybe you should save a little extra money. Maybe you should give your employees bonuses. Like, this is how much we're looking at. Let's get that money out the door and use it for something that's going to benefit the business. So retirement as well, it helps us make decisions about that and what we can hold on to, what we can't. So taxes shouldn't be a surprise, right? You're just filing paperwork in April. You're supposed to be paying throughout the year. If you're not, it's totally fine. But this way we can kind of guesstimate and know, so there's no shock that happens in April where you're like, what? I owe what? It's like, people generally that I'm working with know in October, November, December where they're at. And so they can prepare 4 months ahead of time or 5 months ahead of time rather than on the day. This is a little just blow up picture of the Schedule C. Remember, I told you that that's the form where the sole prop DBA, and the single member LLC, they all file this tax return. That's all the profit and loss information from the spreadsheet dumped onto a Schedule C. That's all it is. Those are the expense categories. Other expenses end up here, and the detail of the other expenses is on page 2. Most people are not doing this on paper anymore. So if you're doing it on software, it'll guide you through the process. Tying up loose ends. So 1099s, I have a slide at the end, almost like a glossary that has a few extra slides that are important, but we usually don't have time to cover. That includes the fact that 1099 rules have just changed as of January 1st, 2022. So I want to name it, but for now I want to talk about this because it's pertinent to this year for 2021. If you pay people, so if you pay people to help you, and they're not your employee, if you pay them just as you're paid, self-employed, or if you pay someone to rent space, and this is not a home office related cost, I mean rent when you're renting a space outside your home, there's an expectation that you're going to issue 1099s to these people that say how much you paid them. And the theory behind it is that you made money. If you want to claim an expense and have a lower tax bill, then someone better be taking that income somewhere. It's like hot potato with income, like pass it to the next person, pass it to the next person. It's unfortunate that the rules around it are, so the amount of money that you pay someone is $600 when you have to issue that form. That is such a small amount of money relative to like the real issues around tax and where our tax dollars are going, but that's the rules. So you have to know them. So the expectation is that when you say, I hire a contractor, they're going to help me with a project, the first thing I'm supposed to do is get them to fill out a W-9 form, which I have a link here. It has their name, their tax ID, they sign it, they give their address, they give it back to me, I keep it on file. At the end of the year, I add up how much I've paid them, and then I issue them a form 1099 NEC, and that's for non-employee compensation. I issue them that form that says the amount I paid them. And then they take that, and that's the information that they can use to do their taxes. They should already know how much it is because they should be doing their own bookkeeping, but that is a form that they need to have, and that is a form that the IRS will have record of. Same goes for landlords. Landlords falls on a 1099 miscellaneous form in the rents box on that form. Again, for practical purposes, I would say a lot of my clients do not issue these. I asked them, they didn't do them. I know they need to. I'm not going to not let them take their expenses, but should you be audited, there could be an issue down the line. But please, I don't want this to jeopardize your ability to rent somewhere. Like if someone's like, I don't want to give you that form, just keep track that you tried to ask them, that you wrote an email asking for this information. If they won't give it to you, just keep that email somewhere saved that you at least tried to comply. Does that apply if they're international? So there's other rules if you're paying people out of the country. So I would do some research around that. I had one client that was doing royalties outside of the country, and in some ways you can kind of get away with it here or there without like any kind of reporting. But if it's becoming a lot of money and frequently, there are certain people, especially in like the music industry and doing licensing work, that you might want to talk to get extra support around that. And if that is something that you're worried about, you could always email me and I could see if I could hook you up with a tax person that could consult with you. Because I don't know for sure. I'm pretty like simple when it comes to what I work on. I was saying this earlier that my tax knowledge is really specific. Like what I'm teaching is really what I know. And I try really hard to just be really good at this, because the truth is that for small businesses and people starting off, there's so much discomfort and so much need to have like actually like counseling and therapy around money and interacting with the government, that there's very few accountants that are willing to do that labor and also find value in it. And so for me, that's what I'm focusing on. And that's the work I probably will always do because there's such a great need for it. And so that means though that my education sometimes gets limited. And so clients outgrow me. So I have them graduate from me essentially. And then I take in the new class of newbies. And that's who I want to focus on, because there's no place for you to go. There's free tax service to a certain point, but there's only a level of complexity that can generally handle you preparing it yourself or using like one of the free programs through the IRS. But then the leap to a CPA, not necessary. CPAs are generally very overpriced. Generally, they don't speak to actual small business experience. And in Oregon specifically, our licensing requirements are so intense, only in Oregon, that you're getting a very high caliber tax preparer if you're going to hire anybody. That's not saying they're not going to be a jerk, because that's also a common thing I hear, is that someone tried to talk to an accountant and they made them feel stupid. They made them feel shame. They made them feel like they're not making enough money. My feeling is that it's not my decision. To me, profit is not the sign that you are a successful business. So it's up to you what that looks like for you, right? So again, I'm going to tell you as much as I can share, and then I have a bunch of people I can share to get more resources if you need them. But if you ever get a weird feeling from an accountant and you don't feel like you can advocate for yourself or say like, this doesn't feel right, or explain it to me, please email me what you're explaining, leave and find someone else, because that is not how you're supposed to be treated. And our industry needs to change, really. We just need more accountants that are coming from a more person-centered approach and are not trying to replicate this kind of like toxic system, because it is toxic and it's not fair. And the 2022 thing I'll get to at the end, because we're just about there. Filing taxes versus paying taxes. We've already been through this. Just remembering these are separate things. So paying taxes is supposed to happen all throughout the year. Then we file them, and then we figure out, do you get money back or do you owe? If you ever are not able to do it on time, so say you need a little bit of extra time to file, you can file for an extension and it gives you 6 months to file. So if it's due in April, it's actually due in October, but that extension does not apply to the payment. If you owe, it's still due in April. And so we start accruing penalties and interest in April. So it's just something to keep in mind. These are separate acts. Quarterly tax payments, right? So quarterly taxes are paid. If you're an employee, your employer handles that for you. If you work for yourself, you're supposed to do it yourself. You don't have to do them. If you don't, and you owe $1,000 or more, you're going to get some kind of penalty. It is really small. It is nothing compared to credit card debt. It is nothing compared to other kinds of loans. It is basically a really cheap line of credit. So that's how I want you to think about it, because it is not predatory. It is reasonable to deal with. And if you really think that you can't afford to pay the tax now because you're not going to be able to pay for your own expenses, then don't worry about it. Just remember you're going to owe it and keep it in the back of your mind, right? Like, people carry debt for a very long time. IRS debt feels very uncomfortable for people, even while they have $50,000 of student loan debt. Like, IRS debt is kind of like less expensive in a lot of ways. So, and they'll work with you with a payment plan. But if you want to pay quarterly, then there's a schedule set every year, approximately these dates every year. You know, if the tax season, tax day falls this year on the 18th, so the first quarter will be due the 18th, but it's generally these dates: April 15th, June 15th, September 15th, and then January 15th of the following year is when your quarterly taxes are due. So if the way we calculate it is, for example, if one year you owe $2,000, well, the next year I'll just take that $2,000, split it up over 4 payments, and I'll say send in $500 a quarter to the IRS. And if for Oregon, we'll do the same. We'll just take what you owed the year before, split it up 4 ways. If you at least pay that and you owe more, you probably won't have any issues with penalties or interest. It's really the underpayment of the estimate, right? Like, based on the year before, if you got a refund the year before, you probably, even if you owe money, won't be penalized. And again, the penalties can be very, 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 very low. So I wouldn't make that a reason to pay the tax if you think that you might be better off keeping the money. Because maybe instead of spending the money on the taxes, you can invest it in your business and turn it into more money. Maybe not paying the IRS or Oregon Department of Revenue with estimated taxes makes sense, because maybe something changes with your business and things get really slow. And now you pay the tax and you have to wait to get it back. You know, so just to be mindful, I don't want you to feel pressured to do it. You just want to know the data. And you could pay online, you could pay by check. I would definitely, at this point, online is the only way I would recommend, because of how slow everything is with the IRS specifically. They are so far behind. So I would try to take care of everything. They tend to cash checks just fine, but I would, for record keeping, I would probably want to have everything paid online. They even have an app now too. The local taxes we mentioned, so there's where for checking your zip code with TriMet, Lane County, the City of Portland tax, TriMet tax, if any of you is eligible for it. One example is if you have profit of $10,000 in your business, we minus $400 from it, because I don't know why, that's just how they do it. You multiply it by this random percentage, and it's $73 on $10,000, and then it's a business expense in the year you pay for it. City of Portland tax. So until you make $50,000 before expenses or gross profit or gross income, I'm sorry, you don't owe anything. And you file an exemption and you just don't owe, you're just reporting that you have a business. At $50,000, you're gonna owe the city $100. Once you get to 100,000 gross, then you owe the county another 100. So a $200 tax at $100,000 of gross income. And then it slowly raises from there for the sole prop and single member LLC. Partnerships and S corporations, it's a slightly higher percentage. So it's a little more expensive. The city loves sending nasty letters, loves it. Really aggressive letters, lots of them. They love cashing checks and then saying they never got your paperwork. They love telling you you owe a presumptive tax that you wouldn't owe. I mean, again, the tax generally is about $200 if you owe it, or $100. I've seen clients get them and say, you owe a presumptive tax of $800. I've seen this more than once. I find it really problematic and predatory. I think it's really threatening. People get really scared. They don't understand what that word means. They just think they owe it. And I've had people pay it without asking first, which leads me to the, what happens if you get a letter about your taxes? Don't hide it. Don't rip it up. Don't send the money. Unless you know it's 100% accurate, ask for help. Sometimes there's sketchy things like scams out there, which we all know happen. Like the IRS is never going to call you. Someone says they're the IRS, send a letter. But if you get a letter and it seems weird, look up the name on it. There's one scam that goes around that acts like it's the Secretary of State. It's $150. And again, with the Secretary of State, it's $50 every other year for the DBA, and it's $100 a year for the LLC. This one's $150. It looks official. At the bottom, it says, this is not affiliated with the Secretary of State. It's totally a scam. And I have clients all the time sending me a picture of it. What is this? And I'm like, scam. So again, just look it up. Like, I know what happens when you get a letter is what happens when I get one from the IRS. I'm like, I don't want to, I don't know what this means. And I know what I'm doing and I don't want to look at it. But you open it, look at it, research it, and then ask for help. You have access to me now. You could email me and ask me to look at it and I can take a look. So just try and ask questions, but do not make it go, it won't go away. They're not going to just stop bothering you if you're on their radar. And just because you get a letter doesn't even mean it's right. So just like that presumptive tax, I got into tax in part because I had my bank account frozen, because I had an issue with my tax. I had Jackson Hewitt do my taxes one year. They made a mistake. I didn't know. I went into a shame spiral. I thought it was my fault. I thought I owed the money. I was freaked out. I didn't know what to do. I thought I hired someone to help me fix it. I was faxing them, going to Kinko's, faxing letters all the time from the IRS. Help me, help me, help me. One day my bank account was frozen, and then a fee was taken out for freezing it. And it was the IRS put like a lien on my bank account, or levy, I forget which one of those. It was not good. One of those L words, one of those 4-letter L words that is not love. They froze my account. They took money out. Eventually I learned to do tax and I figured it out, and they owed me money. So it's just because you get one doesn't mean it's right. I've had clients who got a 1099, a letter from the IRS saying they got a 1099 for $75,000, and it was a mistake. It was actually $750. So just like, it happens, right? So I just want you to know that it's not necessarily you. So these are a bunch of low cost services for small businesses. And then my extra kind of slides that I throw in at the end is one just about owner pay, because a lot of people have questions about that. How do I do that? What does it mean? So I have a slide kind of explaining it, penalties and interest, and just illustrating that the penalties and interest, the penalties are worse if you don't file than if you don't pay. So just making that clear, that filing the tax, the informational part is really important to the IRS in Oregon. Payment is actually not as important, and you can work it out with them. 1099s for 2022. I really just want to make this clear. I have articles you can read about, but the whole thing is that traditionally, when you use a third-party payment processor to pay people or receive payment, unless you get $20,000 worth of income or have 200 transactions through the processor, you wouldn't get a tax form for it. So through PayPal, through Venmo, through whatever third stripe, you wouldn't get a tax form. For as of January 1st, 2022, if you do $600 worth of business, you're getting a 1099K from these third-party payment processors. So they're cracking down. If you have a Venmo account that's personal and you're doing business in it and they catch on to it, they could freeze your account. You could have problems. Again, who knows? I mean, again, this is preying on working people. Like all of these laws are just preying on working people. Like 110%, that's what this is. So what I would say to you is get familiar with this new law, get familiar with how you're paying people, make sure everyone's on the same page with what's going on. I'm sure a lot of people are going to go back to cash. I think some people will be like, hit me up with those emojis all the time. It's all personal. We're going to call this something else, whatever you need to do for yourself. But remember that this is a threat. I don't know what's going to come of it. None of us really know. I think it sounds like a horrible nightmare and there's no reason for it, but this is how the government, I'm not even saying the IRS has so little funding at this point that they can't even really do much, but this is how the government is going to prey on working people to get revenue that is not coming in from all the people that can afford to not pay, right? The more money and access and resources you have, the more you can lobby the IRS to do what you want, and the least amount of money you can pay. And that's like in that Dorothy A. Brown book, she really explains it through tax code. And for me, couldn't be a clearer example of someone making $600 selling on Etsy, but they're cracking down. And so we have to know, and we have to kind of combat it. And then personal property taxes. Again, I've said most of my clients are not dealing with this, but it's also important if you do need to know about it. And that is everything. Oh my God, y'all are amazing. Any more questions? Did I miss anything? No, you just put all the, nope.
All right. Any questions? Any lingering questions? Don't be shy, and you can raise your hand. You don't have to.
Oh my God, I'll help you. You're welcome.
All right. Well, I will follow up with the recording and all the content for this workshop so that you have it to refer back to. And I think that, Jenna, it sounds like you're really open to having people reach out to you directly. So thank you for that generous offer. That's really awesome.
Yeah, for sure. I mean, it's tax season. So if you want to ask me a question, maybe don't ask me 10 questions in 10 emails, just do one. And know that I'm not going to be as fast to get back right now, but I appreciate you taking the time to be here, because I also know that you're going to share this with other people and you're going to spread the word, which is amazing. So if you want to ask me something, please feel free to reach out and I'll do my best to get back to you.
Great. Thank you.
Yay.
All right. Well, thank you everyone for registering for this workshop, for attending, for being patient in terms of getting in technology. And I did put the link for our remaining creative impact workshops in the chat. So if you want to go check out what we have in store, there's actually quite a bit coming up. So check it out. Let us know if you have questions. You can contact me. I'll just enter my email in the chat as well. And
I can put that Wave tutorial link. Let me see if I can do it and share it.
Yeah, I was trying to
share it with y'all.
Find it in a tidy place, but it
let me see. Let me make it public.
Sure.
Copy link. I think this will work. So again, this is a work in progress. I eventually want to make it like a slideshow presentation that will be hosted, I think, by the library, by Multnomah County Library. But I love sharing free tools. So if you find this helpful, or if there's things about it that are missing, let me know, because I would like to make it as useful as possible for people.
Great. Fantastic.
I see my clients looking at it right now. It's pretty cute. Thank you. Do you all want me to stay on for a second, Laura and Courtney, just to check in? Or
no, I mean, I think we're good, unless you feel like you want to chat with us and wrap a little bit, but otherwise I think we're good. And just look for follow-up in your email that you use to register for the workshop. Thank you so much. Best of luck in your tax prep, and
thank you.
Take care out there.
Yeah,
Talk to
thank
you all
you.
soon.
Take care, y'all. Bye.
Thank
Bye.
you.